Good morning, traders. This is Delvin Williams, and today I wanted to show you how I do my market analysis on the desktop platform for Thinkorswim. I did a really brief overview of some of the things on the mobile platform yesterday, and this desktop platform is just as robust. There are so many things that are on it, and I would love to go over each one, but today we are just going to see exactly what the market is doing. Typically, I look at the market within the first 30 minutes to an hour, look to see what's happening, look at the internals, and then make a decision on the bias that I want to take for the market today. So, just like yesterday, we're going to go over to the left hand side of the screen, the same thing as on the iPad, and look at all the different items I have in the watch list. The first one is the S&P 500 futures. The second one is the Dow futures. The third is the Nasdaq futures. We look at those first to determine how strong the market is. Today, there's only a 0.21% change in the S&P, a 0.26% positive change in the Dow, and a 0.12. All of those numbers are fairly low. It's saying that there really is no commitment to the bullish side, so it's good to assume that the market might go a little sideways today. If we look at the chart over here on the S&P 500 that I have, you'll see that there are the same indicators as from yesterday. This is my super trend. You'll see it change from red to green as the trend goes up. You'll see the colors of the bars now change for the Ichimagic, meaning each one of these are responding to the Ichimoku, telling you exactly how strong or how weak the trend is. And then you'll see my 100 average here and my 200 average here. All the way down to the bottom, we're going to have our MACD, which is going to show us divergence as the market moves up or goes down. And we also have a few things on here, but I'll talk about these in another session. These are called pivot points. But when I look at the long term daily trend, this is since the beginning of the year, you can see the market is going up, pulling back, and then going up here. So we're still in a strong uptrend. But for as far as daily goes, the day to day, I will drop that down, go to the hourly, and see what the hourly trend is doing. Right now, over the last 6 days, the market has been showing a little bit of the downtrend on the hourly, and it made a huge drop here on Friday, and it's been slowly bringing itself back up. But then we have a nice dip, a really good pullback on the hourly chart, right at a point in which it reaches a retracement level. We talked about the Fibonacci's yesterday, but this is a really good retracement level and a turnaround right at the 200 average. That gives me a little bit of confidence that the market is also going through a weakness that could be taking it down even further. But when we look at our super trend, it is above the trend line. So those two things basically say the market is going to be pinballing between some overhead resistance and some lower resistance from the technical standpoint. Then I would go down to the 5 minute and look to see what the market is doing since it opened. Over the first hour of the market, it opened around here. It went down all the way until about 10:15, and now it's doing a little bit of pullback. It's pulling back very closely to the 5 minute super trend, and I will keep track of this to see if the market is going to maintain that weak bullishness that we've seen earlier over here on the watch list. And hopefully, if it can show a little bit more weakness, I might become a seller today. But that's the first analysis for what's going on in the S&P 500. I'll do the same thing on the Dow Jones. Chart looks pretty much exactly the same, and so I'll go straight to the 5 minute. The Dow Jones is also showing a very similar action. It's been going down from 9:30 till about 10, and now it's pulling back and it's showing some weakness right at the 5 minute super trend. Once again, it gives me a little bit of confidence that I might be able to go short here. And then do the same thing on the NASDAQ. I drew a fib on this a couple of days ago, and you can see that it went up from January to about May, hit a top, pulled back about 38%, and now it's heading back up again. Once again, this is a strong pattern for a continued movement up, but we're not psychics, so we have to keep track of that to make sure that we aren't getting too much of a bias. And go down to the 5 minute, and looks like everybody's on the same page. We had a nice drop. This is a really steep drop in the Nasdaq. I mentioned yesterday that the Nasdaq is kind of the crazy cousin. He moves a little bit further and faster, following almost the same patterns, and he's also pulling back to about the 5 minute super trend, and also touching his 5 minute 200 average, 200 bar moving average. With all of that being said, we can see at least that the first three components of our watch list are in sync, even though they're not even though they're not the exact same numbers, they are moving in the same direction, which then takes us to reading our bank index. The BKX is up 1.2%, which is extremely high compared to all the other ones. So that means something good is going on with banks in the background, which normally drags the market back up. Then we have the semiconductor index, the SOX. Semiconductors are directly related to technology stocks, so when semiconductors are up, technologies typically can follow. The semiconductors are at zero point 0.4. That's a significant bullish for an index. But at the same time, the NASDAQ is at zero point 0.1. So you can see they're not really going along with each other. And then on the XBD, which is the Securities Broker Index, you'll see it's up 0.91. All three of these are saying that the market has a bullish sentiment, but the actual futures are saying that the market is neutral. Those internals right there give me an insight into the fact that if I am going to go short today, I need to be very aware of any times that large spikes to the upside are occurring, because it may just be there's an undercurrent that's going to take over the market and drive it back up. That's the number one way I use these three indexes. Then the SPY, the DIA, the Qs, and the IWM are just my quick access ETFs. Once I see where I want to get in the market, I might grab the DIA and drag it over here, have the chart change to exactly what the DIA is doing, and most likely get in a short trade, a long trade, a short option, or a long option. But that's why these are here, so I can get access to them very quickly. And let's drag that NASDAQ back. Then we go down to the rest of the review for the internals. First, there was the VIX. The VIX was called the Fear Index, right? So the VIX is down 2.59%, which means fear is down 2.5%. That's the way we read that. So if there's less fear in the market, then that means someone is most likely, more people are more likely to buy or put risk on the table. And then we have our advancers, decliners, some of the best indicators for looking at what's going on in the market. Right now, there are 1,647 stocks advancing right now in the New York Stock Exchange, compared to 998 declining. If you take a ratio of those two, you're a little bit at maybe 1.7 to 1, something like that. Not necessarily a huge gain. We normally want something like 2 to 1, 3 to 1, and definitely 4 to 1 is a great day. And the same thing for the volume. We have 101,000 up volume in the New York Stock Exchange, and we have about 57,000 down volume, which definitely takes that closer to 2 to 1, but it's still not strong enough for us to gauge it as a way to give us a bias. And then finally, we have our TNX, which is our Treasury note. We spoke yesterday that when Treasury yields go up, that means people are selling treasuries, which means they're most likely moving their money into riskier assets, which are normally stocks. And if the treasury yield is going down, that means people are actually buying long term annuities, and those are causing the people to take their money out of the stock market and possibly put them into treasuries. So when you see basically a positive number on the treasuries, you should also be seeing a positive number in the stocks. That's kind of the loose connection, but it's a good way to gauge whether the market is doing something that you haven't seen, that you aren't seeing that's under the hood. And then we go to the commodities that I like to see. So I have the gold futures. I'm always checking to see what gold is doing. And then we have the crude futures. I'm always checking. These are all daily bars. Always checking to see what crude has been doing. Crude is currently doing a pullback, and it looks like it's heading down some more. Maybe we'll see some cheaper gas prices in the future. And then I move straight into my currencies: the euro, US dollar, see what he's looking like. The dollar is still gaining strength against the euro. Sometimes I'll check out the yen, I'll check out the pound, and then I'll check out the Aussie. In each one of these, the percentage changes are fairly muted. There's zero point 0.5 on the euro, but everybody else is pretty muted. So I don't see any underlying currency risk going on to the stock market. So with everything that I've seen so far, the market definitely has a bullish slant, but the bullish slant seems weak. So if I was going to get into a trade today, especially a day trade, I would most likely follow my super trend only, keep myself out of any trouble. I would make sure that I went short about here, and if the market pulled back above one of these two moving averages, I would get out. And then I'd wait to see what's going to happen. 9 times out of 10, if the market does a really good pullback above here, you'll see some great volume, and it'll go to try and take this top out, which was the high of the current day's open. And if that happens, then I'll switch to a bullish position. And then from that bullish position, I'll make sure that I have all my indicators that are below it as my stop losses. But either way, guys, these are the types of things that we're going to learn to do. These are the things that I do on a daily basis. And I just want to make sure that you understand all the aspects and all the things that go into being a successful trader. So until we talk again, happy, happy, happy trading, traders, and everybody be safe out there. Talk to you guys tomorrow.